All right. So welcome to another community forum series here with my colleague, Wesley Alexander. This is, I'm coming to you, I'm Alfredo Mathew from the Future of Our Work podcast, founder of Working World LLC. And we're doing this series to really talk about topical issues of the day around equity, education, workforce, and entrepreneurship. This is such a dynamic time with so much happening. We just feel it's really important to stay informed, stay engaged, and help people find ways that they want to show up and help to, create the world that we want to see. And today we have an amazing conversation with someone that I met a few years ago, Julie Clowes from the Small Business Administration. I met her at a couple nifty events down in San Jose. She was one of our keynote speakers. And the SBA is playing an incredibly important role in supporting small businesses and bringing back the economy. I mean, there isn't, another institution right now in the United States that has a more important role for our economy. And so we're really appreciative to have you here today. And I'm going to let my colleague Wesley here introduce himself.
Good afternoon, everyone. My name is Wesley Alexander, CEO of CoBiz Richmond. At this particular time, we're really excited to partner with folks like Julie, as well as Alfredo, to have a real conversation that people can kind of digest and take action in regard to some of the resources and insights that are shared. Ultimately, we all need to be working collaboratively to ensure the wellness of us entrepreneurially, professionally, and personally. So we're excited to engage in this conversation, and thank everyone for their time today.
And so, Julie, if you can just quickly share with us, what is your role and how did you come into this work?
Thank you, Alfredo and Wesley, for the invitation. So currently, I am the district director for SBA's San Francisco district office, which even though we're San Francisco based, we actually cover 14 counties in the Bay Area, from Santa Cruz all the way up to the Oregon border. So the way SBA is structured is we have our headquarters. We're a federal agency of the government. We're an independent federal agency. We're based obviously in Washington, D.C., like every other federal agency, but we have a field structure as well so that we can really work more closely with our small business community and kind of leverage our district offices as a way to help deliver all of our programs and services, and to create local partnerships so that we can't do it all by ourselves. So we do rely heavily on creating partnerships and working with different organizations to reach the small business community. So I've been with SBA for, like 23 years now, more years than I like to admit publicly, maybe, but and I've had a lot of different roles inside SBA. I started in Detroit, my hometown, and then I moved to Washington, D.C., where I actually was in-house counsel for the agency. I'm a lawyer, which is the most boring occupation to have in D.C., but then just shifted back to the field side of operations between the DC market and then out here now for about 2.5 years. So I've been on both the headquarters and the field side of the organizations, which has been a really, really interesting and very educational experience. So now that I'm out here, hoping I can leverage all that to support our business community in the Bay Area and beyond.
Well, that's awesome. So you have experience in the Midwest, experience in DC, and experience here in the Bay Area. We're going to really need that expertise and that breadth of experience to get through this. So let's just start with, why is small business so vital to our economy, right? Right now, we just hit 30 million unemployed people. There are so many, and small businesses employ so many of those people. Mm-hmm. And right now, how are these, right? We have 4 or 5 super large companies that are taking more and more market share, and small businesses are really struggling to adapt to this moment. Why are they so vital to our social fabric and to our economy?
Yeah, I think, just look around and, that just think of like what you do on an everyday basis, right? Like where you go to either shop or drop off your dry cleaning, or, where you might fill up your gas tank if you're driving somewhere, where you might stop to pick up some food, where you get your haircut, where you buy your coffee. Most of those entities that you interact with on a daily basis are small businesses, and you probably don't even think about that. You're just going about your daily business pre-COVID-19, and you were interacting with all of these businesses, and when you stop and think about it, it's pretty amazing just how much we interact with them, how much we depend on them for just our regular everyday supplies or needs. And then how much we enjoy and appreciate them, when it comes to food and arts and entertainment and other resources that they provide. And I think it helps. The thing with small businesses that I love is just how creative they can be, and nimble and flexible and adjustable. I mean, that's where we get our innovation from, right? I mean, no company starts off at Apple's level. It started with two guys and an idea, right? And building some stuff and growing into the behemoth they are today. But everybody starts small, and that creativity, and then the community that they bring, right? They're what make a neighborhood, the interesting businesses and the personalities. And I always find with small businesses that no matter how tough things are, and like right now, I mean, this is probably the worst crisis these businesses have had to weather. And yet they're the first ones to step out and say, oh, but you know what? There are people in my community that are worse off than me, and how can I help them? Even though they themselves are not sure, maybe how they're going to survive entirely through this, but they're still looking outward to support their community as well. So I just think that there's so many reasons to love small businesses. And right now, I think we're seeing, some of the best too.
Thank you, Julie. Small businesses very much are responsive to local needs, as well as just supporting the local ecosystem. And the SBA does some great work at the federal level all the way down to the local level. We've had some great interactions with many of your team members. With that said, can you help elaborate or share with people, like, what is the role of the SBA? Sometimes I think people who are operators of small businesses aren't really informed of the value that you guys create. It'll be awesome for us to share that right now.
Sure. So pretty much everything that we do falls into one of four buckets. And so I think most people probably associate us with money, right? Whenever you need to get a loan or something, they think about SBA. So financing is a big piece of what we do, but we actually offer, in the financing world, we offer a wide spectrum too. We do everything from microfinancing through nonprofit partners, all the way up to venture capital. We actually do have venture capital arm. And so like the aforementioned Apple, for example, was a beneficiary of SBA venture capital way back in the day. They were probably still in the garage at that point in time. And then in the middle is kind of our bread and butter program, if you will, the government guaranteed loan program through commercial lenders. So the financing is a big piece. Another big piece is government contracting. So this is federal contracting. As we all know, the US government is the largest buyer of goods and services in the world. And our whole goal is to try to help small businesses get their representational share of those contracts, which is about, in aggregate, 23% of the contracts that the federal government lets. So we have a variety of, through certification programs, through educational programs, through partnerships with programs like the PTAC, to try to help these small businesses break into contracting and then be successful in contracting. And then also incentivize the federal agencies to use these smaller businesses as well. And then the third bucket, which is, I say this all the time, so I don't feel like I'm talking out of turn, but I think the most valuable thing we offer actually is our free business advising and low and no cost training programs. So we have a lot of partners through grant programs that we partially fund. Hopefully people have heard of some of these at least. The Small Business Development Center, our SCORE program, women's business centers, and we have veteran business outreach centers. Those are the four primary ones. And all of them offer free business advisors. So you can go once, you can go 100 times, it's always free of charge. And I think no matter where you are in your business life cycle, from I just have an idea and I don't know what to do with it, to I've been in business for 20 years and I need some new growth opportunities. always great to sit down with someone who's not, intimately involved with your business and have them help you find the path forward. They're not going to do the work for you, but they're definitely going to be there to coach you and mentor you, help you tap into other resources and find that path to get you to your goal. And I think that that's an invaluable resource that we offer through those programs. And the other thing, the final bucket, is the one that's getting all the attention right now, and that's disaster. It's I think many people don't realize SBA does go in with FEMA on every nationally declared disaster. We are there to provide, in a quote more normal disaster, we provide both physical disaster assistance to any size business, homeowners, landlords, renters. If you've lost your home to the wildfires, for example, we would provide loan programs to cover uninsured losses that you may have suffered. Corollary to that, we have what we call the economic injury disaster loan program. And that's there usually for small businesses. That is limited to small businesses. And that is to provide a working capital loan to support the financial needs that the business had. The business may have been impacted in some way or shape or form by that disaster. And that's what this loan is there to help them through, to provide working capital so that they can, maintain and recover in this process. So it's actually in a more traditional disaster setting, like the hurricanes and the wildfires and things we experience, it's a very important program, but it's usually not the largest thing we do. But now, and obviously, and this is the first time we've ever taken that and applied it to a pandemic situation. So it becomes the most important thing we do right now, because I think it's, you're hard pressed to find a business that hasn't been impacted by COVID-19 right now. I think, maybe a toilet paper manufacturer, but I think everybody else has had some sort of impact as a result of COVID-19. So we've kind of flipped the switch on a smaller, less known program, and it has become, and moved into the forefront and has become a very major piece of what we're doing to try to help the business community right now.
That's really helpful. That's really helpful to see that breadth of experience. Like I had no idea you all did venture capital investment, right?
We have, some of our biggest success stories have come out of that. I think we surprise a lot of people. I mean, we've got companies, like we said, the Apple, we've got companies like FedEx, Winnebago, Callaway Golf, Under Armour was a more recent one. One of my personal favorites, Ben & Jerry's. So yeah, we've had, and if I remind everybody starts small, right? So there's resources to help businesses no matter where they are in their life cycle.
So Julia, thank you very much for providing that thorough insights into the SBA. If you wouldn't remind, I'm just going to do a quick recap. So SBA provides a wide range of financing opportunities geared towards small businesses, all the way from the microloans to potentially venture capital funding. You also mentioned that you're a great resource for government contracting, considering that the federal government is one of the largest procurers of goods and services, and you try to allocate about 23% of the purchasing activity directed towards small businesses. You also mentioned the wide range of free business advising resources as well, whether it's for women entrepreneurs, for veterans, for just anyone looking to explore the idea and bring it into operations. And then you mentioned the disaster recovery resources in partnership with FEMA to help people manage their working capital needs or just get back on their feet. And so just was wondering, at this particular time, considering that COVID-19 and the shelter in place is really unprecedented, can you share any insights about what people should be, how entrepreneurs right now should be either reaching out to the resources that you currently provide or preparing, tracking their expenses, working with your organization and your partners in synergy at this time?
Right. No, that's a really good question. And I think we've all seen, there's one particular program, the Paycheck Protection Program, that's gotten a lot of attention. But I do like to tell businesses that that's not the only option for them. And for many businesses, it might not even be the best option. So I do always recommend to take a pause for a moment and really, since every business is different and has different needs, let's figure out what your business needs are. And even if it's just a simple exercise of pencil and paper and just kind of itemize, what are your actual financial needs right now? Don't look at losses for this particular exercise. I mean, it's important to document that for other reasons, but for this exercise, let's look at what your actual financial needs are right now. And then let's kind of itemize what those are and kind of do a quick, tally. So there, do you have payroll, or is it just yourself, or do you have employees? And then do you have other expenses associated with that payroll? Do you offer health insurance, for example, and what kind of premium costs that might be, or any other benefits that you might offer your employees? Let's document that. But then let's look at your other expenses. Do you rent a facility? I mean, in the Bay Area, we know that could be a very hefty amount out of your monthly expenses if you're renting here. The utilities that you might have associated with that. Are there vendors that you're still paying? Regardless of whether maybe you're open or not right now, maybe you do have some financial obligations you need to continue with some of these vendors. So it's a matter of tallying all that up and then seeing what types of expenses you have, where the greatest amount lies. And that can help guide you to whether one SBA program or another is going to be beneficial, or do we want to look outside of SBA? It's a very realistic circumstance that a lot of these truly self-employed that have no employees and maybe had a very modest revenue stream prior to COVID-19, when they do a calculation for the PPP program, it's not a whole lot of money. And they might actually make more off of unemployment than they would out of the PPP program. And now that with PUA, with the pandemic unemployment assistance, everybody is pretty much eligible, even if you were independent contractor or truly self-employed and never paid into it. You previously couldn't apply for it, but now you can. So I think getting the data and then kind of running some basic numbers and figuring out financially what's going to be most advantageous for you today to survive, to get us through, this really, really, really challenging period, and hopefully looking forward when we can start to reopen and people can get revenue back into their business. And I always tell people, you don't have to do this all by yourself either, right? Those aforementioned resources, those business advisors, great people to tap into. They're all working right now, albeit by phone and email, no office visits right now, but they're there ready to help you figure this out and figure what's best for your business. Our SBDC network has ramped up and they've hired more advisors to help specifically try to triage some of these really immediate financial concerns and financial issues and help people get matched up with the right program and make sure that they're submitting the right information for the different loans, whether it be from SBA, whether it be California iBank, whether it be another resource. So I would say, gather your information, look at your particular situation, and then tap into one of our advisors to help you, and let's get your application in wherever it needs to go.
How do we get access to an advisor? What's the quickest way to set up an appointment?
So you can look at our website to get the different access points. The SBDC network here in Northern California has actually set up like a hotline of sorts, and that's 833-ASK-SBDC, staffed by real people. You can call and get questions answered. You can also get appointments made to have a more in-depth conversation with an advisor. So that's 833-ASK-SBDC, or you can email them at loans@asksbdc.com. And then we also have there's 5 SCORE chapters in the immediate Bay Area, and a couple of women business centers. And if anyone wants to go to our website and look at our resource guide, we have all of the points of contact in there too.
Great. So with a little bit of research, a little bit of digging, you can find the resource that you need and you can access it. It's not this labyrinthian thing that like you'll never reach a real person. You all are ready for this moment. At the very beginning of this call, you mentioned that, right, you're doing 14 years of loans in 14 days. So that is not what the SBA was designed for. You weren't really designed for this moment. You're trying to meet this moment. What are some of the barriers and the challenges that the SBA is facing? And if you could respond at all to some of the criticisms that are happening in the press right now, right? That larger businesses, Shake Shack, et cetera, the LA Lakers are getting these concierge services through their, their retail banks, their commercial banks, but a lot of small businesses are struggling. How do you do, right? You got this incredible mission to serve small businesses, but there's millions of them. How are you, what are some of the barriers and what are you trying to do to overcome them?
Right. This is such an unprecedented situation. And I think everybody from, our elected officials all the way on down is like trying to wrap their heads around, what do we do? How do we help? We know there's a need. But I think even understanding how great that need was or is, was something that's still being discussed. So as we all know, the CARES Act, which was actually the third piece of legislation of all the different stimulus bills of recent history, is the one that initially created the Paycheck Protection Program and also provided additional funding to SBA for our current Economic Injury Disaster Loan Program. So the PPP program is something that's brand new to SBA. So this is not a program that existed that just got additional funding. It was a brand new program that we launched, and I think the thought was to try to model it. It's kind of a subset. I like to call it a cousin more of our 7A loan program, our government guaranteed loan program. So technically in its core, it is a government guaranteed loan program. It's just in this case, the banks are getting 100% guarantee, which we've never done before. And there's this forgivable portion of the loan, right? So all or some of the loan can be forgiven if people use the proceeds of the loan in the way they were intended. So this is all new dynamic. So we literally were in a position where we were building the airplane as we were flying it, which is not an ideal situation, but if we had tried to follow our normal rulemaking process and program process, it would take 6 to 8 months. And we know we obviously cannot wait that long. Businesses needed help yesterday. So it was a matter of launching it, leveraging our existing bank partners, coupled with bringing in new bank partners, because we knew we had to try to expand the opportunities for small businesses to participate. And try to provide more avenues for them to get assistance and to get a loan. So we had, I think on the first wave of PPP funding, we onboarded, I think over 500 new banks into our program. And specifically trying to get banks that maybe either had never participated with SBA or had participated maybe a long time ago, and we're trying to bring them back in. And so we did get a lot of more community-based banks, credit unions, for example, and even some fintech lenders, which had never traditionally participated in SBA. So it was an effort to try to leverage the existing partnerships we had, create new ones to really get as many touch points, if you will, access points for the business community to apply for the program. One of the things we did notice in the first round, I think, a bunch of lessons learned from the first round. I think the program moved really quickly, right? I think we all knew intellectually it was going to move quickly. It just was a matter of how quickly it did actually move in reality. Was pretty astronomical. Like you said, the 14 years worth of lending in 14 days. And so it was definitely not the smoothest process. It was definitely bumpy at times. But at the end of the day, when we do look at the overall data, we know obviously we got the $349 billion that was initially appropriated in that first wave. And when you look at it in totality, the majority of the loans were actually $150,000 or less. So that was, I think, about one of the 1.6 million or so loans that were made. 1.2 million were $150,000 or less. And the average loan size was around $200,000. Now, that said, that was taken into account at that point in time. That was everything. We have since learned through the media and other things that there were some businesses, mostly in the restaurant or hospitality industry, that were not necessarily a small business, a typical small business, but because of the way the CARES Act legislation was drafted, they were actually eligible to receive these loans. So we have since seen that a lot of them have opted to return their funds because they were actually able to get assistance elsewhere. They have other resources they could tap into for assistance. So those funds are going back into the pot, so to speak. So in this second wave of funding right now, we are going to add back the money that was returned. So those funds will be relent, if you will, in this second wave. I think, one of the things that was a challenge, and still is a challenge, is when you have, we're used to doing maybe, I think, around 30 billion in lending a year. So that's, and our systems are designed to handle that kind of workload. They could maybe scale, somewhat, even if you double it, right? 60 billion, that's still a lot of lending in a year. But now we're in a situation where literally overnight we had to go from systems that could accommodate 30 billion to 349 billion. So that had some technical challenges. It had a lot more resources trying to access, one system, which has created challenges. So I think this time around they've been trying to experiment with different pacing models and things to try to make sure that it's a level playing field, if you will, across our lending partners, that everybody's got equal access into the system, and that everybody is able to submit their applicants' loans into the system. Again, we are obviously limited in the amount of appropriation that we have in this round, so we will get to a point where we run out of funds again. But right now it looks like I actually didn't get an update yesterday, but from 2 days ago, so on Wednesday, we were up to about 90 billion that had already been committed through this program. And again, a lot of smaller community banks are participating and are being successful in getting the loan application, processing the loan applications very quickly and putting them into our system. So I think across the board, there's a lot more, there's a lot of smaller loans being made in this second round. And so hopefully that's reaching, the population that could really use this cash infusion to pay their payroll. And that's the other challenge we're finding too, right? Since this program got a lot of attention and the forgivable portion, very attractive component, right? That a lot of people didn't stop and do those calculations I talked about earlier to figure out, is this the best program for me? Like, what will I actually get out of this, and what could possibly be forgiven, given the fact that PPP is focused on supporting your payroll. So it's either supporting the employees you have today, or if you had to let employees go, to bring them back onto your payroll. So I do always tell businesses, remember, when you're analyzing or deciding which program, this is the lens you need to look at PPP through. Like this, the whole goal is to employ people and keep them on payroll. So that's why it's more narrowly focused. The EIDL program, some of these other programs are much more broad in scope. And if you have a lot of business expenses just to keep yourself in operation right now, that might be the program that is more advantageous for you.
Wesley, before you jump in here, if that is the criteria, shouldn't we see, if this PPP program is working, shouldn't we see the unemployment numbers starting to go down, right? Or as people go back into work, but that's not really what we're seeing, right? We've seen month over month.
Well, remember, when you look at the timing of when the PPP program, I mean, it was launched, what was that, April 3rd? And so the funding ran out around April, was like 16th or 17th. So a lot of that money didn't really hit these businesses. They didn't get the funds dispersed maybe until around, that week or the following week. So it's just now that a lot of those businesses from the first round have the funds dispersed to them so that they can, rehire. That's the situation they're in. So I'm guessing from a data perspective, it's going to take another couple of weeks before you might see people being pulled off the unemployment rolls and going back into payroll status with their employer. So I'm curious to see, let's look at a couple weeks from now. What is the unemployment data going to show us? Was there a drop as a result of businesses being able to bring some employees back?
Awesome. Hey, Julie, we just want to share, we really appreciate the scale of the operations that you guys were tasked with trying to facilitate. You're literally trying to go from, like you said, $30 billion in deployment of funds to scale into something that's $349 billion in a very short time frame. I think it's very important that we all are mindful that this isn't a perfect process and we're trying to improve it. And we only do that by giving, feedback and having conversations like this. So we appreciate the effort of you and your department. With that said, for many entrepreneurs that, let's say, for example, they don't have 200K in revenue as a small business, which the first wave of loans, that was the average size of the loans dispersed for the PPP program. Could you kind of speak logistically? Do those individuals need to reapply for the second wave? Do they need to follow up with their bank? How should the bank be communicating with them if they are approved? What are some of the nuances there that you can kind of share?
So that's a really good question. So what I've been recommending for businesses, if they applied, during the first wave and their business or the bank didn't finish processing it or didn't get it submitted before the funding ran out, I said you really should check with your lender to see how they're treating those applications, because everybody could do it a little bit differently. So some banks, I think, were holding on to them. They maybe during the week and a half or whatever we had between funding sources, they were still taking in applications and processing the ones they had in-house in anticipation that we were going to get additional funding from Congress and that would reopen. So they were kind of queuing things up, if you will, getting ready for Monday. And but not every bank did it all the same way, right? So I recommend you go back and check with your lender to see what they did with your application, if they were continuing to process it, or if they're expecting you to reapply now that the second round of funding is available. So SBA wouldn't have any way of knowing that. That would be something that would have been the bank's decision on how they wanted to treat that or handle that. So that would be the first thing. The second thing is if you reapplied, let's say, and they're in the wave 2 and you haven't heard from your bank yet, I would say that that's not necessarily a reason to panic. The banks are very busy right now trying to actively process the loans internally and then in turn put them into the SBA system so that they can get an SBA loan number, which signifies to them that they've got a piece of this pie, so to speak, that they are included in this batch of funding. So I think a lot of banks rather are busy in this process, right? The process mode and getting as many applications submitted as they possibly can before the funding runs out. And then they might get back to messaging the businesses, the borrowers, that they were successful in issuing them, because it is a loan. So the banks will need to issue closing documents and things. So there will be a process before the banks can actually disperse the funds to the individual businesses. So your bank is the best source of information as to where you are in the process right now. And then they will, like I said, they will get around to the closing and the dispersing. So good to talk to your bank to see if they're where you are and how quickly they anticipate being able to close loans and disperse the funds.
And just to clarify, so you mentioned inquire with the bank, potentially reapply if you may have to reapply depending on what your particular lender or local institution is doing. And this primarily applies to the Payment Protection Program.
Yes.
Could you also highlight share a little more about the disaster economic injury loan
Sure.
and how that could be a great resource to people at this particular time as well.
Sure. So that program was actually available first before PPP was even created. And California, to the state of California's credit, was like the first out the gate to get the disaster declaration and make this program available for businesses in California. So what this is a working capital loan for businesses to cover, again, not going to cover losses you suffered, but to help you pay your ordinary business expenses, which can include payroll. It can also include rent, utilities, accounts payable, all the ordinary business expenses you have that you ordinarily could have paid for, but for the effects COVID-19 is having on your business. So this loan was up to $2 million was the maximum, and for small businesses, it had an interest rate of 3.75% and a term of 30 years. And we're also deferring the payments for a year. So if you apply for this loan, this one is direct from SBA. So unlike PPP, where you have to go to a participating lender, the EIDL loan is 100% from SBA. So you will apply with us, we will process it, we will close the loan, and we will disperse the funds direct from the US Treasury. So very different paths to take to access those two programs. EIDL, we were doing an online application process. It went through a couple iterations. One being, again, the huge demand on the system was something the original online application was not designed for. So we did have some technical issues there. But then when the CARES Act was passed, it created a new piece, if you will, of the EIDL program, this EIDL Advance, which was an up to $10,000 advance on the loan that could be a forgivable loan as well. So the $10,000, this EIDL Advance is calculated based on your employees. So it's $1,000 per employee up to the $10,000. And if you're self-employed, you count as an employee for this purpose. So that's at least $1,000. So on March 30th, we relaunched a new online application through the SBA.gov website that allowed businesses to apply for both of these programs using one application. So it was very streamlined, and you just filled in some basic information about your business, looking at 2019 revenue, costs of goods sold, if you have costs, other expenses, and number of employees, and that kind of stuff, some really basic information. And then at the end of that application, you saw a box that said, I would also like to be considered for the EIDL Advance. You check that box, submit, up popped a loan number that hopefully people copied down, and then you know you were submitted and you're in the queue for processing. The intent was hopefully that this EIDL Advance could be a little bit of money that could be pushed out faster than the regular loan, because it is a loan, and with the high volume of applications, you know, it is taking a little while, unfortunately. I think it's unfortunately taking longer than any of us hoped, but it is processing. The EIDL Advance, we have since discovered, is something they're actually calculating and then pushing out to the borrowers directly. So it is being directly deposited into the account that you designated on your application form. So there actually isn't this wave of communication. Unfortunately, it's just the funds are magically appearing in your account. And then the second phase is the loan, which, because it is a loan, there will be closing documents. So what SBA is doing, because we're operating this virtually as well, is sending an email to the applicant with a link to a secure portal where they can obtain their closing documents and sign and return them to SBA so that we can disperse the rest of the loan. So it's not unfortunately as fast of a process as I think all of us would like, but the money is going out. It is going out every single day. There's no it's not like we wait till Friday to disperse funds or anything. It's literally on an ongoing basis every single day. The EIDL Advance funds, and then also the EIDL loan funds are being approved and dispersed.
Just to confirm, so the EIDL, so in case people, the acronym the Economic Injury Disaster Loan Program under the SBA. And currently that's something that small businesses will have to apply directly with the SBA to potentially receive those resources. Additionally, if you are selected for the advance, as an example, you're just immediately direct depositing those funds into someone's account in regard to the actual traditional loan under EIDL. They will have to kind of go through the closing process, and right now that's taking a little bit longer, if I was to summarize that correctly.
And I will tell people too that we did take the EIDL loan application down temporarily because we were also hitting our appropriated limit in that program as well. But this fourth piece of legislation that gave us more money for PPP also gave us more money for EIDL. And to the tune of about $50 billion for EIDL plus another $10 billion, I think, for the advance. So we are going to be relaunching that. I was hoping I could make the grand announcement being on the webinar today. You guys could have gotten, but I unfortunately can't confirm the date yet. But it is going to relaunch and people can apply. Now, one question I get asked if someone already applied and just hasn't gotten their funding yet, they asking me if they need to reapply, and the answer is no. Those applications are continuing to be processed. Everybody who applied from March 30th onward, when the new application came available and the EIDL Advantage or Advance program became available, you should have gotten a loan number that starts with a 3. And so if you had that, you haven't received your funds yet, it is still being processed. If you were one of the very, very early applicants with the original online application, you would have gotten a loan number that started with a 2. And so if you haven't had communication with SBA and your loan number started with a 2, then you might want to reach out to us. But anybody who had a loan number that started with the 3, you are being in the queue for processing if you haven't already received any of the funds yet. So I know that's been a source of confusion. So I just wanted to highlight that you don't need to reapply, but people who haven't had a chance yet, certainly when we reopen it, please apply.
Before I transition to Alfredo, could you can you confirm for people who should be applying for these particular programs? Some people think, hey, I'm only a sole proprietor, I don't qualify. From a nonprofit, I can apply. Can you just address those kind of myths, I guess you could say?
Sure. So your form of business doesn't matter. You can be a sole proprietor, you could be a C Corp, or anything in between. You're eligible to apply for both programs. There are a few limitations as far as like industry or use of the funds. So for one of the criteria is that you have to be a legal business, and that's legal at the federal level. So even though cannabis is legal in California, it is not legal at the federal level. So unfortunately, like cannabis businesses cannot apply. But your form of business, it doesn't matter. Like I said, there are a few industry sectors that are prohibited, like cannabis being one. If you're a lender, you're prohibited from applying for these loans. But there's just a few industries. Likewise, this program, unlike our normal lending programs, both of them are also open to nonprofit organizations. Again, they need to be small by our size standards, but they can be eligible to apply under EIDL and PPP. PPP, the legislation did limit the type of nonprofit, so it has to be a 501c3 or a 501c19, which I believe is the veteran organizations. So. But nonprofits can apply. In fact, I know several nonprofits that were successful in obtaining PPP loans. So that is definitely not a barrier. The thing is like you just need to be a business of any form that pays taxes. You need to at least be filing on your taxes to have some sort of business revenue, self-employed, income from self-employment. Whatever that looks like, because we just need to verify you really did have some sort of revenue as a business.
That's super helpful knowing that nonprofits have access to this as well. On the line, we have with us a couple representatives from Richmond Main Street, which is an organization that's been working with the downtown corridor businesses for many years. They're board members of CoBiz. Wesley, can we let Vivian Wong ask her questions. I think that she has a great perspective and maybe some in-depth questions asked directly of you, Julie.
Hello, my name is Vivian. Can you guys hear me?
Yes. Hi,
Yes.
Vivian.
Okay, wonderful. You can't see me, right?
Just your picture, whatever, the one you submitted, I guess, on your
Okay, phew.
profile here.
I'm not wearing any makeup. So thank you so much for just explaining the programs through the SBA. We are so we have been on top of every single news that came out. So we were front of the line through Mechanics Bank to get the PPP, which did come through. So we're super grateful for that. We also got the EIDL loan advance, and we're very, very grateful for that too. So I have two specific questions. Is there documentation needed to prove where the EIDL advance money went to? And secondly, is there a portal? Because I've been trying to understand how to submit proof of payroll to demonstrate where the money went within the first 8 days for the PPP. So those are my two questions.
Okay, yeah, for the EIDL advance, even though the calculation is based on employees, it's part of the working capital loan. So you can use it for any of your ordinary business expenses. And because it is forgivable, you aren't gonna have to demonstrate how you used it. If and when you get the rest of the EIDL funds, again, that's part of the working capital loan. And so it's not necessarily, I'm not aware that there's going to be any criteria that you have to show proof of how you use the funds, but it's a loan. So, 12 months after you get it, you will have to start paying it back. But I'm not aware that you're going to have to submit any substantiating information for that program to show how you use the funds. But for the PPP, we are actually still waiting for some more detailed guidance to come out when it comes to the forgiveness portion. First wave was just trying to get the program launched and out there. Second wave is going to be this forgiveness aspect of it. And so the clock, because the PPP program covered 8 weeks of payroll costs, the clock for that 8 weeks started when the funds for the PPP loan were dispersed to your business.
Yes.
And so that's the period. So after the 8 weeks is over is when you are eligible to go back to the bank and say, okay, I used the loan proceeds for payroll like I was supposed to, and here's my supporting documentation. I would like my loan forgiven. So at that point in time, because we still got a couple more weeks, hopefully we'll have some more clear guidance as to what exactly you need, what the banks will ask of you to submit. But I'm imagining it's going to just be whatever paperwork you have to show for that period of time that I did pay, X number of employees, X number of dollars, and or I had benefits, premium packages, or whatever that prorated for 8 weeks, cost this. Here's the bill to show I paid it. So we're still waiting for some of those clear details, but it's basically going to be just whatever you have to demonstrate that you did make payroll and that the amount you paid, and then any of the benefits that you might be associated with those employees.
That is super helpful. Thank you so much. I was wondering, I have running down on time. I was confusing the 8 weeks with the 8 days.
Yeah.
So I was like, oh my gosh.
No. You won't even be eligible to apply for the forgiveness until your 8 week window has passed.
Got it. That is so much more helpful.
And in the rule, I believe, it's in the rule or the FAQs. At this point, they're kind of all one in my head right now, but it's in one of them and actually the full window to ask for forgiveness is going to be a full year. So even though, PPP program sunsets, if you will, with the legislation on June 30th, you still have till June 30th of 2021 in order to request the forgiveness piece.
Oh, wow. Okay.
Yeah. So it's not even like you have to do it right when the 8 weeks ends, but that would be the earliest you would be eligible to go back to the bank and ask for the forgiveness.
Okay. Wonderful. Thank you so much.
Sure.
So we've been laser focused on PPP, the EIDL program, right? Like, how do we get access to money? But we know that small businesses and entrepreneurial pipelines were not in great shape before this crisis, right? We've seen a decline in small businesses for 40 years. I've been involved in youth entrepreneurship for a long time. how do you help young entrepreneurs start businesses? Like, we don't have the infrastructure, we don't have the capital, we don't have the business incubation support, especially from, you know, communities like Richmond and East San Jose and Hayward and East Oakland. So let's just open this up in our last, you know, 10 minutes of what should we be doing more generally beyond this initial federal stimulus to invest in small business and entrepreneurship? You know, ideas that maybe Julie, you have, Wesley, I see Ben Wanzo and some other people, you know, on the line, Latanza. What do you think we should be doing beyond this immediate relief?
Yeah, I would love to hear feedback too. I just started having some of these conversations with some chambers and other groups because they like the immediate need is survival, right? So it's funding, it's how do I stay in business, or how do I just survive for X period of time? Because we still have that unknown factor, right? We don't have an end date per se when things go back to quote normal, and then what is normal going to look like? So, you know, we've been talking about, okay, once we get through this survival phase, what is the next phase going to look like? What kind of assistance a business is going to need? How, you know, even with our SBDC advisors and other advisors, what kind of assistance can we provide to help these businesses go into, you know, more of a traditional recovery mode almost, and thrive beyond this crisis period? So I would still love feedback too from any of the callers today. Or maybe you're having those conversations inside CoBiz as well to figure out what do we do? How do we best support the businesses moving forward?
I'm ready to, Wes, let's do a little hackathon, right?
Definitely. I know just from the conversations I'm having with people, a lot of small business entrepreneurs they're not really aware of the resources that the SBA has to offer. They're very much disconnected. And I think just being able to, for example, today you highlighting the 4 different tiers or 4 different level of resources that you guys provide, and CoBiz and folks like Alfredo and other partners like Richmond Main Street, being able to waterfall that information and communicate specifically how those businesses can leverage those resources. I think that's you know, it's basically we have to kind of really get out there and tell people how they can touch the resources. Sometimes it seems to be very abstract, or in the situation with the PPP program, I know individuals that have applied and they're like, I haven't heard anything back. And I was the first one to reply, and they're like, do I not count because I have, you know, small revenue that generates small revenue, and I know these other businesses got it. So there's those elements that we just have to address and kind of tell people, you know, you got to keep persevering, keep knocking on the door, and hopefully we can have some better outcomes.
Someone, Alicia from Richmond Main Street, asked Julie, can you give us an update on the Contra Costa SBDC? What's happening locally?
Yes, so that, well, we know that SBDC for the new host went out for bid to try to get a new host for Contra Costa. I think that, you know, unfortunate timing, it was like right before COVID-19 effects really hit, and we had to go move to shelter in place environment and all of that. So I believe they are postponing that process a little bit, and we'll probably be reopening it, but I don't have a date certain yet on when that will be reopened for bid. But they are servicing Contra Costa right now. So you can call through the main line, and there's still a lot of the advisors on board, and other advisors are covering. So it's not as if we don't have service, we just don't have a host institution yet. But the Humboldt State University, which is the host for all of Northern California network, is being the temporary host, if you will. So we still do have the resources available. So no one should worry about that. The resources are still there.
And Julie, for a lot of the entrepreneurs that I engage with, when they hear the word loan, it's kind of intimidating to them. Can you speak to the, I guess, the flexibility or the favorable terms that the SBA tries to offer to businesses during normal operations and also in the pandemic, so that people can kind of not just automatically cut off these programs as an option for them?
Right, right. I mean, I think sometimes we're trained to think that, debt is a bad thing, but there is such a thing as good debt or, managed debt, smart debt. And it makes sense in a lot of situations. And so what in normal, non-COVID-19 scenario, SBA's programs are there to help really support the banks. It's a guaranteed loan to the banks. So what that means is that you as a borrower, whether you're a startup or a very young business and maybe doesn't have much of a track record yet, that kind of uncertainty in your business makes you a higher risk category for the banks. So what the SBA program does is take away some of that risk. So we're there on the kind of the back end, if you will, with the banks to say, we will guarantee this loan up to, 70, 80, 90% in some cases. So that means the bank isn't risking as much and they're more likely to lend the money to the business and the borrower. You would still negotiate the terms with your borrower. What SBA does is typically set caps on things. So we set caps on the interest rate that can be charged, and it ties to, whatever the prime rate is on the day that you apply and stuff like that. And there's some factors that go into that based on the size of the loan and the maturity dates and stuff. So, but we've set caps so that nobody, no lenders are gouging any of the small businesses or setting exorbitant interest rates or anything. It's competitive rates. And let's face it, these banks in normal conditions all compete amongst each other too, right? So it behooves them to be competitive in what they offer. So we set parameters around the program and how the banks operate it and how the banks service the loan. There's no prepayment penalties, for example, allowed, and there's no exorbitant excess fees. We carefully structure what these look like, how they should be serviced, so that it is a viable alternative. Is it cheaper than doing it just conventionally if the bank would just do it on their own? Maybe not. But it's certainly cheaper than a lot of the other alternatives out there, let's say a credit card, for example. So it's for borrowers who are using like the 7A or our 504 program, which is to buy like real estate and fixed assets. It's often the difference between getting a loan and not getting a loan. So we're not going to take a bad deal and make it good, but we're there to take those deals that are a little bit more risk than the bank is comfortable with taking on their own and making them a bankable deal.
That is a wonderful role that you're playing to facilitate entrepreneurship and small business to have viability during these times and all times. And we really thank you for taking an hour out of your day to share this information with us. We're going to take this recording and we're going to find ways to share it out and take all these resources and share it out to our networks. And so we really, really appreciate you sharing this with us. And this is, right, Wesley and I, this is our fifth conversation that we've had. We've talked about the digital divide, the federal stimulus package, closing the school year strong. Next week, we're talking about the transition to college and career. What's going to happen with the class of 2020? Which is a big issue. And then we're going to be talking about putting Americans back to work, just different approaches to employment. So we really appreciate your time. And, let's make sure that we get this right. But Wesley and Julie, you can share your final appreciation.
Most appreciative to Julie. Thank you for being here. I think you shared some wonderful information, and hopefully we can waterfall this down to our constituents.
Yeah, and thank you both, Wesley and Alfredo, for this platform, and I know all the work that you are both doing to support the small business community as well. So it's a full court press right now, right? Everybody's trying to help, and that's the one thing, my takeaway I think for entrepreneurs is one, don't disqualify yourself for any of these programs by not applying. First takeaway. Second, you don't have to do it all alone either. Look at the resources around you and tap into some of them, especially the free ones. There's no reason not to tap into those. So yeah, please let us help you.
Awesome. Well, we thank you. We'll take all this information, we'll share it with our folks, and just keep up the good work. Appreciate Ben, Alicia, Latanza, Vivian for joining us until the end, and we'll see you all soon. All right. Go entrepreneurship.
Happy Friday.
Thank you.
All right. Bye, everyone.
Bye.